Late last year, the American Transportation Research Institute reported that truck auto liability premiums have risen 36% per mile over the past 8 years, even as crash rates have declined. In 2025, insurance cost and availability, and lawsuit abuse, which can influence costs, ranked among the top issues facing the trucking industry. That's why today we're going to try to pull back the curtain on how insurance decisions are really made. Steve and I are joined by Johnny Schrunk, owner and president of Professional Safety Consulting, who works directly with underwriters evaluating motor carriers. We're also joined by our favorite resident insurance expert, Bert Mayo, who's here to tell us what underwriters really look for and how safety, culture, and data shape the outcome. Stick around. You don't want to miss this conversation. All right, well, and welcome back to the TTT Podcast. Really appreciate everybody being here. Got a great conversation today. Going to frame up the insurance process in the trucking industry. We're going to talk a little bit about qualitative, a little bit about quantitative. We've got our old friend Bert here as our insurance expert. We've got new friend Johnny Schrunk, who works with underwriters to help them evaluate motor carriers. And so I think we're going to see an interesting two sides to this particular conversation. So without further ado, Steve, thanks as always. Bert, welcome back. Johnny, thanks for coming on the podcast. You want to take a minute to just tell our listeners a little bit about yourself?
You bet. Johnny Schrunk, Professional Safety Consulting. We're going on 40 years in business, and we've been in the wheels business that whole time. A lot of other loss control functions too, but primarily, transportation loss control. That's what we specialize in. Working with lots of different types of programs, program managers, MGAs, and insurance carriers.
And we're going to have to remember to spell out our acronyms, Johnny. MGA, why don't we start
Absolutely.
there?
Managing General Agents.
Got it.
Well, fantastic. Well, thank you both for joining us. And as we kick off the new year, an important topic to a lot of motor carriers, especially if you look at the latest ATRI report on the top 10 issues facing the industry, where insurance came in at number 3 this year. So I think it's a relevant topic. Maybe as we jump in, Sean mentioned this a little bit. Let's talk a little bit about what the qualitative side of the business is and the quantitative side, kind of at a high level. Maybe Bert, start with you on the qualitative side.
Yeah. I guess I got to mention what Johnny's part is, and it's the quantitative first, because underwriters typically just look at numbers. My job is my client's broker to represent them in the marketplace is the touchy-feely stuff, to go in there and see what they're actually doing. We use the word tell a story. So, yeah, they may have had a few bad years where they had some losses that, they didn't intend to have, obviously, but their loss ratio is a little higher than it should. The underwriter really wants to know, why is that not going to happen again? So my job is to go in there, find those things, find positive trends in their loss runs, find positive trends in their CSA data, and then present that to an underwriter in a convincing way that, hey, this company's turned itself around. Those things were blips on the radar, and it's not going to happen again. So that's the qualitative side. Again, like I mentioned, the culture. I'm out there looking for the culture.
You are a culture, Bert. We appreciate you.
I am a culture.
Well, and I guess, maybe it's an art versus science issue, right? Bert, you provide the art, and you're beautiful, so you provide that artistic portion. Johnny, you do the science side of the business, I guess,
yeah,
right?
Or we could look at it like good guys, bad guys, if we wanted to, right? Sounds like Johnny's kind of the bad guy. He's killing us with the numbers, and Bert's coming back to save us. Is that right, Johnny? Probably not.
It can be in some situations, but yeah, no, Bert's spot on. Typically then, we take the information provided by someone like Bert, and then we look at that and then try to analyze that, on behalf of the underwriter, just to basically unravel that and say, okay, is this, sort of what you see is what you get? There's a lot to the story, as we know, we look at numbers, but there's a lot more to the story when you talk to people and learn more about their operations.
Well, I think we're going to learn a lot about the story. Before we jump into the specific quantitative and qualitative things, maybe we could step back and just discuss sort of the process a little bit. So if you, Johnny, could describe for us a little bit about the renewal process and the importance of starting early. 60, 90, 60, and 30 days are often talked about as key milestones in the renewal or insurance acquisition process. Can you just talk a little bit about the process for our listeners?
Yeah, absolutely. And one of the things that should be noted is because we work with different programs that specialize in different sizes of risks, and that could be, some insurance markets might write small fleets, some might write medium fleets, and some write large fleets. Those processes can be a little bit different in those, obviously. So what we typically see in for example, the small to medium size fleet versus the large fleet, which Bert will talk about that too, is we'll see some of the same things, where we'll get a request for either a new business or a renewal business. And some of the things that we get are obviously the applications. The underwriter has a lot of the stuff that Bert will talk about as far as MVRs and things of that nature. What we'll get is kind of a snapshot, an overall snapshot of the application. Who are they? How many units are they running? Where do they go? What do they transport? Some of those things. We might get copies of loss runs, which we appreciate, and cab reports and things like that we need to analyze and review before we set an appointment and go out and visit them and try to help them. So those kinds of things vary between every single market. We do see a lot of variation in the amount of information that we receive. Sometimes, and we know when we all go to these conferences and the educational conferences and stuff, that's what, as in Bert's position and our position, the more information, the better, right? Good information in, good information out. So what you'll commonly see in some sectors is there's incomplete documentation, and it's not a good thing, obviously, when there's incomplete applications for insurance or there's missing things. If we want to tell the story and we want to look good, and Bert will talk about this, we want to provide as much information as possible, right? To accurately reflect who are these guys, what are they doing, what are their strengths, what are their weaknesses, and where can they improve? And so from my perspective, it's not a cookie cutter process because all of these different markets do look at mostly the same things, but some of them do a better job than others as far as providing that information to whoever it may be, to someone like us or to an underwriter. So typically we'll get that information, and that's why it's nice to have both Bert and I on the call, is Bert can talk about what it means to provide all that information and how to get yourself on the top of the pile versus, some markets out there that might not provide as much information. But typically what we see is, we'll go out, and again, markets are different, but we'll typically go out and visit an account within their first 30 days of bind. So a lot of the renewal stuff has already transpired that Bert will talk about.
What does that mean, 30 days of bind? I don't mean to bog us down with jargon, but I just want to catch up to the conversation.
Absolutely. Inception date. So the inception date of the policy. So typically when loss control is called upon, and I will talk about this loosely because obviously in our space, we're a fractional resource. So there's a lot of markets out there that might have their own internal loss control team. And then there's folks that may outsource to someone like us where we're a customized plug and play loss control program. They might have someone that they're using that could be a retired safety director or someone like that they want to either call upon a small fleet, or they want boots on the ground loss control where they say, hey, this is a large enough fleet. We want someone to go out there. We want them to visit with them and meet with them, learn more about the operation. So that can be across the gamut. Right. So it might be, fleets that are 1 to 5 units. It might be that they just want someone to make a telephone call and talk to the owner versus a larger fleet. We're going out, we're meeting with the safety and risk manager or the owner of the fleet to conduct, the visit and find out our information.
So that's you mentioned a couple of things, Johnny, I think that I wanted to get. You talked about the volume of information and telling the story, and maybe Bert, from your perspective, and Johnny certainly jump in on this too, but how much does the quality of the of the submission impact on the whole pricing and
Yeah, I mean, I won't, and I'll probably wind up doing some TrueNorth plugs in here, guys, but that is, in my experience, that's probably the number one thing. Complete submission, legible, good quality, easy for the underwriter to tab through and find the information they're looking for, but you cannot leave things blank. And that's something we pride ourselves on doing. Completing the submission, getting all the accurate data to the underwriter. I mean, there's so many. Think about it today. Johnny, you mentioned CAB, and I'm not kind of to Sean's point. So CAB is basically the CSA for the motor carriers out there. The insurance industry has a tool we call CAB, which is basically your CSA data. But so they've got all this stuff at their fingertips already. They know where you're performing in CSA. They know or should know where your losses have been. And you can't hide that information. So that's got to be complete. And then I heard Johnny mention the term top of the pile. If it's an incomplete submission, it's going to the bottom. That underwriter has got a stack of things to work on. We want ours to be first, and we want it to be complete. And we want it to look good and include all the information.
So do you want to go over and above like what they're asking for? Like how do you?
Yeah, is complete only 100% complete, or can we go 110 and get to the top of the stack? Or
so not speaking for you, John, but Johnny's there to complete, right? I'm there to take it to the next level, to explain away, and probably explain away is not the right term, why that loss happened, previous losses. Look, we call it hair on, it's got a little hair on it, so to speak. And so we want to take that and say, why did that happen? What was happened within the company that those things happened, and what's changed? So we go above that. Our job is to let them know those were anomalies. They're not going to happen again. And here's why: management change, leadership change, training, change new driver standards, whatever it is they change, because most motor carriers they don't want to be there again. As we know, insurance, Steve, I think you mentioned, is number 3 in the ATRI study this last year survey. So it's a big cost. It's usually their highest variable cost within the business. So they need to lower that. And so most motor carriers make the investment to change what has happened if they've had any bad loss years.
So Joey, when in those, since Bert's providing the art to the science, how do you as an underwriter evaluate that? Because you're looking at ones and zeros, right? How do you account for that? And obviously every carrier is going to be different. So how do you assess that qualitative side of the assessment?
There's kind of two sides to it. So we go, throughout conferences and stuff, I hear about that all the time. There's a big variance, and it's like all businesses, really. There's people that take a lot of pride in their business, and they want people to know what sets them apart, from a retail agent to the insurance company to the trucking company, and setting those, what sets you apart from the rest? What are you doing that you feel is better than your peers are doing? And so some of those examples, and like Bert said, we'll see that typically more often in the space where it's larger fleets, right? It's very competitive. They're closely looking at the pricing, what's going on with the industry. They're pushing the needle as far as the technology that they're using, trying to show the carriers, the insurance carriers, what sets them apart, to get the best possible price. That's what we see. That's what we hear. And we notice that typically then we get that information, right? So while I'm not a direct part of that, I've been in the industry for 30 years that I do see that. And there's a big difference. And we know who those names are, the people like TrueNorth that are out there doing those things to set themselves apart. Now, and I've talked to Sean about this before, there's also this big section of the industry that is small to medium-sized fleets. And Bert and I have talked about this before, that there's a lot of competition in that space, and there's a lot of folks that are doing the same thing, right? And that's where you find agents that might not specialize in transportation, and they might only write a few accounts a year, and they're not quite sure what they're doing. And that's where that surfaces. That's where the incomplete applications for insurance surface, and underwriters are looking at these things and going, well, company A filled out all their paperwork and company B didn't, so we're going to leave them down here and we're going to focus on these. giving them their quotes. And so there is a big variance.
Johnny, let me interrupt just a second. As a motor carrier, if an insurance company is relying on the motor carrier to fill out the application, again, that you got the wrong agent. You need to find, that's again where we step in. I mean, because as Johnny mentioned, there's 1,000 markets out there, and the smaller you get, the more markets there are. With the big guys taking these huge retentions or deductibles, there's 4 or 5 insurance markets that play in that space. But on the smaller, the less than 100 truck motor carrier, there's hundreds, I say thousands, hundreds of insurance markets out there. So that application has to be complete if you want the best outcome possible.
I love that frame, Bert. I mean, it seems like we got the right people on the podcast to talk a little bit about that. If you're filling out your own insurance application, you're doing it wrong. Is that what I heard? Because there are people out there like, where do I go to find somebody to help me figure this out? We talk to a lot of folks that are just faking it till they make it, really, growing at gangbusters. And so where do they go to find somebody to help?
Yeah, I think, again, commercial here, call us. I mean, there's a lot of good trucking agents out there. I think we're the best, but there's a lot of good trucking insurance agents out there. I wanted to comment on something you said, growing like gangbusters. I made a note to that. Large, small, whichever size you are, wherever you fit in that world. If you're a motor carrier and you're growing, that's not something we want to advertise loudly and proudly to the insurance market. They don't mind growth because as you grow, they grow. As you continue to grow,
everybody makes money, right? Hopefully,
if you're profitable. But I've seen where motor carriers would get them in the room and they talk about we're fixing to double our size this year, and they look back at financials, they look back at loss runs, and they're like, it's got to be controlled growth. It has to be measured. There's got to be a strategy. You just can't all of a sudden enter into an Amazon contract and, we're going to double our size. I've seen that be very detrimental.
It's interesting you say that, Bert, because Sean and I, as you know, we do a lot of work with carriers of all sizes, and we see that in their operational and compliance and safety departments because they're not set up often to manage that growth in the right way, right?
That's right.
And there's gaps that sometimes can occur because of that if they don't manage it properly.
That's right. And you tell the Johnnies of the world, not picking on you, Johnny, but the underwriter sends Johnny's team out, and you say, I plan to grow 50% this year, and you've got, you've got some struggles already. You will not get a quote. You're not going to get the quote you want.
Yeah, I'm excited to get into the safety and compliance sort of perspective here, but we're talking about growth. We're talking about the data, the initial look. How much does the financials of the company impact your ability to get insurance or the cost of that insurance? How much are you investigating the financial operations of a company?
It depends on the market. Again, depends on what their appetite is and what they use. More so on the larger fleets than it is some of the smaller fleets. Every market has different underwriting guidelines in what they look at. And Bert's going to probably be able to answer this almost even better because of the large fleet sector where they really dive into that, us talking about the quantitative versus qualitative.
I would say if you're staying in and I'm not going to give it a truck company size, but I see it happen around 50 trucks and they get in 100 and 250. They go from buying insurance to financing risk. Completely different approach. Buying insurance is basically I'm going to get a deductible or a guaranteed cost program where I know what my costs are. I won't pay that small deductible or large deductible, but the premium is what it is, and if I'm involved in a loss, I pay the deductible. Financing risk, on the other hand, I'm really biting off a big number. And that's where finances really matter. And you need solid CP, you need professionally audited financials. You just can't send your QuickBooks statement to the underwriter. That's not going to work.
Here's my Excel spreadsheet. I promise it's all true.
Yeah, you got to have solid banking relationships, professionally audited financials. And I go back to I think it was a setup question for me, Steve, but thank you. But the broker, you got to have a great trucking insurance broker that understands all that, because it completely different model for these motor carriers that are financing risk from the 50, 100 and less trucks that are buying insurance.
Well, that's an important data point that a lot of carriers may not see the importance of as they're through that growth spurt. So I know, Sean, you want to get to compliance for safety, and I do too. But one final question.
Oh no, I got one more anyway. So
okay.
Let's keep it going.
All right. Well, let me ask mine first. So the number 2 item in ATRI's top 10 issues this year was lawsuit abuse reform, and we know litigation and nuclear verdicts have really created a stir in the industry. So how has the rise in that changed the calculus for insurers and underwriters?
Yeah, so I may offend some of my underwriter buddies, so apologize if any of those listen to this, but I forever have said that you cannot underwrite a nuclear verdict, right? So, and you see it happen. Great motor carriers, clean as a whistle, something all of us would, take a risk on. They get hit with a large, nuclear verdict in some of these judicial hellholes we have out there. And if you look at the numbers across the industry, none of the underwriters have made any money in the last 5 or 7 years. I don't know what keeps getting thrown up, but they're struggling. So you see premiums go up to try to outrun that. So it's changed it quite a bit. You have to be super, super clean. Loss history has to be super, super tight. And then all the other things that Johnny spoke about, MVR, loss history, CSA, minimum standards, all of that's got to be spot on for them to even consider getting into what we call best in class premiums.
Boy, now I don't even want to ask my other question. This idea that underwriters are taking a bath here for the last 4 or 5 years, that they're struggling.
I think it's longer, Sean. I really believe, I don't know exactly, but I think it's something on 7 years they've been running at a higher than 100% loss ratio, premium versus losses.
Is that like an existential crisis, or is this something that's going to market correct? Or my underwriter's not making any money off my policy, when do they stop writing? And Johnny, we talked a little bit about this too. Johnny calls it paper leaves the market. You got no more paper, you got no more insurance. So from a broader perspective, is this an existential crisis, or does it market correct, or what happens?
Oh, well, I think that, go ahead, Bert.
You deal with the smaller stuff. I'd love to hear what's happening there. I can tell you on the big stuff, I wouldn't call it a crisis, but it is tight.
Yeah, no, and this is spot on, Sean. And I think that what we see and what my perspective is, and again, it's only my opinion, but after being in the industry for 30 years and working with so many different markets and seeing some of them that are successful, there's a lot of great success stories out there, and there's a lot of programs that pull out of the marketplace, right? They lose their paper and they go away, and it comes back to the age-old adage of, if you do the same thing over and over again, don't expect a different result, right? So we're all talking about how a book performs, how the trucking, we talk about the trucking industry, like the stats you guys pulled, and insurance is no different. And we hear a lot of different things, but at the same time, some of the cause of the root problem stems back to just the people and the talent and the way business is being done. And if you do the same thing year after year, you can't really expect a different result. Same with the motor carrier, same with an insurance carrier. And so it takes people to break that cycle and break those habits and try a new system, right? Try to look at things in a different way and analyze that. Because what we see in these small fleets is new markets pop up, they write for a few years, the paper doesn't like the way it performs, they pull out, they find new paper. And I've been a part of that for years and years and years. And what I can see is sometimes it's just these tiny little missing elements. Like, for example, it might be just they're only operating with underwriters and claims, and they might not have a loss control component, or they might just be basing it on only underwriting guidelines that might not be fit for that program. They might not be realistic for a program like, for example, let's just take an example of intermodal. If you don't have talented underwriters in there that understand that it's very common for intermodal carriers to have high vehicle out of service rates, then they're not going to be writing that properly. And so it takes a well-oiled machine like in any business, but it's not just one business, it's the whole industry, in my opinion, of trying to break that cycle. And we see innovation, right? We see telematics and we see people using AI and some of that stuff. But outside of some of the large premier fleets, trucking, in my opinion, is still very archaic in a lot of ways. There's still a lot of small fleets that aren't online. There's still paper driver files. It's a husband and wife working out of their house. The guy was a driver. He's trying to work both on his business and in his business. Really, the only thing in his time span that's changed was maybe ELDs. They're hooked up with telematics, but they're not using them, so they're collecting more data to be used against them. So what we've kind of done to change, or at least what I have, is working with our people, is let's educate them. You know, that's one of the things when we all talk about nuclear verdicts and we go to these conferences, it's kind of like driver turnover. I remember as a kid, my dad talking about how driver turnover was an issue and driver shortages and that stuff in today. But is it really, you know, when we look at the stats? So when it comes to like the small fleets, with telematics, they just don't know what to do. So from an insurance perspective, we kind of pulled back from being, and we don't like earlier in the call, good guy, bad guy. We try to shake that off, and we're consultants. You know, the loss control industry is full of inspectors and auditors, and nobody likes that. You know, they've already got auditors with the DOT. So, you know, our mantra is let's be consultants and try to help them. And so what we've been doing is doing a lot of education. A lot of these small fleets have never heard what a nuclear verdict is, or a medium-sized fleet. They don't know that. They might have been cruising on for a lot of years with just your typical accidents and stuff. They don't know what it means to have a shock loss. They don't know how the industry's losses are impacting them. And so what we try to do is educate some of these small fleet owners that are worried about DOT, is we try to talk to them about what is negligent entrustment, what is negligent hiring, what is negligent training. These are the things that it just takes a little shift in thinking to if they don't understand why, if we go into a fleet and they say, well, we've been doing this the same way for the last 20 years. They just haven't been caught yet, right? Yeah. Where they're running at, they haven't got an audit. They've got some roadside inspections. They haven't had a formal DOT audit. They just don't know, and they just need someone to share with them, hey, look, this is what risk exposure is. You know, Bert's talking about, you know, a lot of these large fleets, they already understand that, but there's a lot of medium-sized fleets out there. They're just trying to make a buck, and they're not right now. We all know that. And so, you know, they're worried about insurance. They're worried about how do I reduce my insurance? And so what we try to do is educate them on this is what's going on in the industry. And if we all do the same thing over and over again, expecting a different result, that's the definition of insanity.
That's right.
So
I'd say, Johnny, on the large carrier, back to that question, Sean. So, and it's being felt across all business line, all size, right? But what's happened in the last 5-6 years, 3 years for sure. So say you bought $5 million in coverage, you know, your limits were $5 million. That motor carrier today, say you're 500 trucks or 600 trucks, you have $5 million in limits. Some of your customers require that. And, you know, there's times we would tell you that's not enough, but sometimes it's not about being enough, it's about what you can afford. That number is now at $3 million because that's all that they can afford. And they've gone from $100,000 retention or deductible to now they're maybe at $500,000 retention or deductible. And the insurance companies have lowered their cap. So a lot of our motor or insurance carriers would write $5 million. Today, they don't write. They'll write 3 or 2. So then you got to go outside into the excess market on your own and try to find it, and that's extremely expensive. So they've lowered their total number, and they've increased their retention or deductible. That's how they've stayed flat-ish on their renewals.
In business, at least.
Yeah.
So are we tacting, Steve? I think.
Yes, I am.
Yes, let's do it. What you got?
So Johnny, you talked about people. Bert, you mentioned early on culture, right? So what are the leading indicators of a strong safety culture, right? And how does that impact on the underwriter's evaluation? What are you looking for?
I'll listen to Johnny backfill. So again, one thing to note is by the time we show up, there's been interest by the underwriter. We're not running out to every motor carrier we submit an application to, right? So by the time they get to the point we're really interested, they've hired Johnny, and then we've got an indication they really want to do this. So the underwriters really want to write business, right? They're in the business of doing business. They're not trying to not write the business. And so I have a lot of conversations with underwriters. I tease them a lot, but they really are, they're trying to write this. So I'm going out, and my first indication of culture, I'll call it, is to look at everything. And when I say that, I mean everything. I just came off of one late last month where we walked into the facility. It was in a part of the world that if I told you I was going there, everybody would just grimace and say, I'm sorry. But when I got there, the monitors, the chairs, the lounge, the landscaping, you could tell this was a well-run machine, well-run organization with good people. And then you don't have to look far that when I did the interview, I guess, if you will, sat down with the safety folks to talk about what they do. That's not who met with me. I mean, they did, but the president of the company met with me, and the president of the company knew as much about their safety department and what they did as the safety director. That's kind of all you need to know in that business. And then it fell in line. Many, many times I may get a chance to meet with the safety director. They can't make time for me. You go in, it's in a rented, I'm not nothing against rented facilities, but you can tell everything about a company from the time you walk in the door. And that's that, like I said about culture, I gave a Forbes definition, but at the end of the day, it's how they do everything. It's literally how they do everything.
So what are your key indicators, Johnny, when you're going in early on to a fleet and you're looking at their data? What are your favorite data points that you think indicate future success or could be problematic to the carrier in the future?
So, good question. Typically, we like to get to know them before we even go in, which is hard because we're not the agent. We're just getting information, and we have a short period of time to get to know them before we set the appointment up and go out there. So we're going to review the application. We're going to review the cab report. We're going to review the loss runs. We're going to Google them. We just want to get to know them, find out what some strengths and weaknesses are so that when we do walk through the door, it's not just, hey, we're here from the insurance company. You don't know who they are, Johnny, which has happened a lot.
Johnny, can I interrupt you for a second? When you say Google them, that made me think of something. Motor carriers, listen to this. Make sure safety is on your website somewhere. It's a safety statement. It's something, because Johnny and I are Googling you. The underwriter is too. Just put a safety statement out there. I care about the community. I care about my drivers. That you would be shocked at how many underwriters look at that and are looking for something like that.
Yep.
The story, Bert.
Yep. Yeah. So we typically will look at all that stuff, but the important thing, like Bert said, is then once we do walk through the door, we already know about them. We don't have to ask the basic questions like, what do you haul? Where do you go? We know that stuff. And that's important to us because anybody that comes into your business, whether it's an agent or loss control or anyone, there's a lot more trust there, right? If someone knows some things about you and they're not just coming in through the door like probably some insurance companies in years past where it's like, oh my gosh, the insurance inspector is here and they're there to just tell you all of the bad things that you're doing. And that doesn't produce results. So, for us coming in there to find out, we know what their weaknesses are before we walk through the door. But sometimes underwriters, and this goes back to Bert's statement when you're talking about vehicles and stuff, there are some companies that may not know that what they're doing doesn't fall within the guidelines of the insurance company, right? And examples of that could be how much they're brokering. If they're brokering over 10% of freight, they don't have a separate LLC set up for it. Could be passenger policy, could be hazardous materials, could be they're dabbling in some tank operations, right? So, some of those things are the things we're looking for, for the underwriter and for the carrier, because it's a team effort. We're not in there to raise any red flags. We're in there to relay that story to the underwriter that, yes, this is what the agent provided to you, or no, the agent didn't provide it direct, or the carrier filled out their application, right? So we're just trying to sew everything together and be able to say, this is truly who they are, and this is where we need to help them. This is what they don't understand, and this is where we need to help them. So some of the things that we do like to look at, obviously, are the things we looked at ahead of time. But like Bert said, we like to go in not with a checklist, but go in with open-ended questions, because people that are passionate about their business like to talk about their business. And so I've been a big proponent of, don't be the one that asks all these questions. Ask one open-ended question, and they'll love to talk about it forever and listen, and they'll, I hate to use this term, but spill the beans. And that's what we want. We want them to open up and tell us, because we don't want to leave and them continue to struggle with the same issues that are going to cause them to be higher risk or cause them to be in a bad situation, if litigation ensues. And so some of the things that we like to do is, if it's a safety director or the owner of the company, and a lot of times in a medium-sized fleet, sometimes that person is both. It's a shared responsibility, yeah. And that can be tough for those folks, because they're trying to run a business and they're also trying to run safety and compliance. They don't maybe have the resources to hire a true safety director, and it's someone that they know, or a senior driver that came up that's doing a really good job at hiring drivers and communicating with drivers. And we've seen this on both sides, and Bert's probably seen this, where, underwriters will look at an account and they've got really good compliance on paper, right? Safety scores and all this, but why are they having all these losses? And then you can see that on the flip side, right? They're not having any losses, but why is the safety and compliance terrible? And so we've got to try to figure out where that disconnect is. And, it always goes back to people and just finding out, who are the people? Are they in the right positions? Is that a strength of theirs? Or, does the fleet owner hired his, daughter from college that doesn't know anything, and all of a sudden she's just thrown into DOT compliance and she needs help with that. Before. And so, right.
Oh man. Go ahead, Steve.
So yeah, I wanted to dig in a little bit on that, Johnny, because I think there's a lot of companies that may look good on paper from a compliance perspective, but they may be having a significant number of crashes or losses. How do you reconcile that? How do you go about addressing that? Because a lot of it, I know you said it comes down to people, and this is where the art comes into play, right? Because we all know that compliance does not always equal safety, right, Bert? Going back to our very first podcast. So how do you reconcile that when you're looking at that?
That it circles back to the conversation I was having about negligent entrustment, right? And these nuclear verdicts. That's what we want to try to share with people, because sometimes it's not about checklists or an audit or a form or anything. It's just about having an open, candid conversation of, this is a business that's been around for 10 years or 20 years, and they take pride in it. And they might be worried or they're not be worried. We need to gauge that. Are they concerned with stuff? Because we all know we've been in fleets where they just say, I don't care, we don't care about that. And then, you can relay that to the underwriter. But if they do care, it's a nice, easy conversation to talk about what's going on in the industry. That's the next step we like to take, is what does it mean to have a good safety and loss control program? And some of the carriers think it's cliche when you say safety pays and all the things that we've heard throughout the years, but it truly does matter that safety and loss control is a profit center. And Bert will attest to this, because TrueNorth is doing that at a high level, and they're doing an exceptionally good job at it. But in these other programs that we've been talking about, which is the bulk of the U.S. DOT numbers out there, the small to medium-sized fleets, the fleets themselves don't have those resources, and they don't think like that, and the markets aren't providing resources to that. So sometimes we might be the only folks that expose them to anything like that, because their agent's not doing it, a broker's not doing it, and the insurance company's not doing it. So sometimes we're the only guys that we have to start with the most basic, which is they think that their insurance is through their local agent. They don't even know that they have an MGA. They don't know what an MGA is. They just get their cab cards for the insurance. Some of them don't even know who their insurance company is. So to have this discussion is pretty high level, and we have to tread into it lightly and very methodically by by telling them if they're concerned with their vehicle out of services or something like that, let's talk to them about at a higher level. What does that mean if that escalates? Not just that it's going to be difficult to get insurance and you're going to pay more, but what are the potential ramifications if you do get into a lawsuit, and what negligent means?
I would add to that too, Johnny, is that listen, the underwriters know your issues. You can't hide. Again, CSA is public, or for all sakes public. They've got your loss runs. They know what losses you're having. They know what you're having on their current program. You can't hide any of that. And if you're on a small guarantee cost program, they're running MVRs, so they know who your drivers are. As I mentioned earlier, underwriters want to write business because they're in the business of doing business. They also want to help their partners. And if you look at the insurance company like a partner, you lean on them. Hey, can I get some help? Do you have anything that can help me? And I know, Johnny, the insurance markets that you work with will provide your service ongoing, or at least some kind of help, whether it's training material or education material, so that motor carrier can start to change the culture of the company. It's, as we all know, it's tough to change a company culture, but ask your underwriter, I need some help. I've got a high maintenance score. I have a high unsafe driving score. I have backing accidents that I'm paying out of pocket. In my experience, they've been more than willing to help the motor carriers.
So, prepping for this podcast, there's lots of blogs out there about, hey, how are we going to best prepare, right? And there's lots of really good advice about, I don't know if it's good advice, you guys will tell me, but, run all of your NVRs and verify this and review your hiring standards. And Steve and I, we conduct audits, right? Compliance audits, and we also do gap analyses. And one of the things that we found is, Johnny, if I'm sitting down and having a conversation with the safety director, that person's on their game, but that level of performance might not be visible like in the fleet, right? Like their policies may not be pursued on the ground. So the question is, how invasive do these renewals get as far as like how many records do I have to produce, and how do I confirm that the things that I'm doing, the initiatives that I have, the drug and alcohol testing programs, the technology programs and monitoring programs, how do I confirm that? How much do I have to confirm that? I can get a good look at a T-bone by, okay, somebody recognized that. I'm going to stop right there, but you get the point. How invasive are these things going to be? How do I tell my story in that way?
Johnny, I'll let you jump on that one.
Yeah, absolutely. Well, I think it's a good question. And I think for us, again, it varies by the individual market. And I'm going to answer it the way that I see it just because I've been doing it for so long. But I think the important thing for the insurance markets is they're already, like Bert said, they're closely scrutinizing, right, the data. It's all publicly available. And that's where a lot of people are doing the same thing, right? They're looking at the same data. But what are we doing with that data? Are we doing anything with it, or are we just filing it? And that's what's been common in the industry is we've decided that we're going to write it, right? Because by the time we get it, it's written. And there's some markets that will closely scrutinize these things, and they may say, this is not what we want, and issue cancellation. And there's other markets that are more proactive loss control where they say, let's help this, let's rehab this account. Let's truly help them and try to retain them. And it might sound crazy to some people in industry, but there are markets that write, certain accounts knowing that, hey, when they get better, they're probably going to leave us because we're more of a distressed market with higher prices, right? And that's what I've always said. There's some markets that will steer clear of someone that just came off of a shock loss. I look at them very closely and say, well, they've been around for 30 years and they produce very, very good results. And they just had this one shock loss. I bet if you go out there, they're on point and they're going to be a great risk to write. I know it's a little bit off the topic, but I think it's important to note because a lot of carriers have experienced that and gone through that, where they go, geez, I've been with these guys for 10 years and we had this one bad loss and they canceled us. That's typically whatever's inside those four walls. That's their underwriting guidelines. That's what they're going to do. But another market might look at them. And if they look at them, very strategically and proactively, they're going to see that, hey, this isn't a bad account. This is a good account. And there's some that are on the flip side as well.
So that's got to be Bert's job, helping to tell the story. What's the documentation that you're bringing to the table to say, hey, that was just a shock loss and I'm doing all the right things?
We are digging through, we dig through everything. We look through losses and find the trends. We do a large loss summary. Our claims folks explain why that loss was what it was. Maybe it's, jurisdiction. Maybe it's, just the timing was bad, nuclear verdicts, those happen. That doesn't mean it's the motor carrier's fault. We all understand that. So we dig through and we look through CSA and find the positive trends and then tie that to some process that the motor carrier has changed or is doing now that they weren't doing maybe a year ago. We'll kind of go back to how you asked the question of the documentation that Johnny's going in and looking for. I always start with, I don't know if it's the blind spots or landmines, but if a motor carrier thinks about what the insurance underwriter's trying to do, he's trying to get the lowest risk motor carrier he can find. And it applies across all businesses, whether it's a restaurant, manufacturing, or motor carrier. Lowest risk. I would tell you, if you're hiring 25-year-old drivers with 2 years experience in clean MVRs and operating within 100 air miles, nobody's going out of town, staying overnight, you're not hauling hazmat or tank, or you're not brokering stuff and no high value, you're gold, right? It's when you get down to 22 or 21 and a half or 23 with 1 year experience or,
age of driver you're talking about?
Yes. Yeah. You start kind of lowering your minimum standards. You start hauling, high valued freight or a tanker operation or hazmat. All of that, we all know what that is. Some of it you can't help, but some of it you can. But as soon as you start, adding risk to the equation, now you have to have a story, and you internally need a process to make sure that stuff is okay. And I go in, I look for those processes, and okay, let's tell the story to the underwriter. Yeah, you are now hauling high value. Now you're hauling cigarettes, or now you're hauling alcohol. What do you do with it? Where are you storing it? All those kinds of things. That matters to an underwriter. They want to know everything. Nothing's off limits, and we expand upon that.
So picking up on that, Bert, I think, Johnny, are there any particular indicators that you're looking at when you're evaluating risk that really carriers should be wary of? What are the key things that are most important to you when you're looking at writing?
It really depends on the market's underwriting guidelines. I mean, we see a lot of different stuff. So we know when we go in, we're already prepared, all of the guys that, everybody's got 25 plus years of experience. So it's okay. Well, we know what they're doing. It's not necessarily that they're doing anything wrong, but are they doing what the insurance carrier thinks that they're doing, right? And this goes back to a completed application and just being honest, because it's pretty easy to spot inaccuracies or discrepancies in things. And we know that in business, and when people fill out forms in their whole life, right? They're trying to make it look better than it might. So the key is just be honest and put accurate information down. It's sort of like the discussions around MCS 150 forms and why there might be a big disconnect. And we've got an insurance carrier that says, hey, they say they're running, 10 trucks, but we get out there and they're running 700 trucks. What's going on?
And by the way,
disconnect?
Steve and Sean, that happens way more than you think. I've got clients that double their truck count on their 150 or double their driver count. It's interesting, and I know it matters in some of the CSA, numbers. But the underwriter will give you a year to correct it. You can tell them, and I'm saying a year. Some don't give you any, but they look at that. They're like, okay, you've got 600 on here, but I know you have 300 trucks. So why are you doing that? And, they all talk about customers. We want to be, viable in the customer market, but underwriters know all that, and they want to get accurate information. I'm still surprised. I'm surprised at how often that happens. I don't know if y'all see that or not, but we see it a lot. Yeah.
Well, self-reported data. Hey.
Oh, no, that's another pod. Sean, that's another pod.
So I think at base, the data says that if I am in an accident today, then I am potentially more likely to be in an accident tomorrow. So an accident in the past indicates potential for accident in the future. How much does preventability come into that equation, right? Because we as motor carriers can just collect crashes just by virtue of driving out in the wilderness, right? But they may not be preventable. So, but I get like data and statistics and blah, 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 blah. And I took a class on it once and I forgot most of it. But is preventability like just a sort of a desperate narrative that Bert's trying to sell to Johnny to get him to underwrite, or how does this work?
So I'm going to say that's a maybe, right? And I don't mean to be evasive in that answer, but end of the day, the underwriter is going to look at the money spent against your premium, the loss ratio. I've had this discussion with a great client, a great motor carrier today, here last year. Everything looks perfect, but they've had a couple of large losses. And I hate to use the word they don't care, but they don't care. If you're paying $1 million in premium and spending $2.5 million in losses, preventability, they look at that going through the year, but they're looking at how that claim is paid. And, that'd be a whole nother pot on claims, but,
So preventability, and it could act in the size of the claim, which could then help you in the long run. At least take the edge off.
Yes. Take the edge off would be the best way to say it, because if you're spending $2.5 million on claims on $1 million premium, you're either going to get an increase or you're going to be looking for another insurance market.
So how has the adoption of different safety technologies influenced the underwriting and insurance process? Is that something that?
Yeah, I wrote 10 matters here on my paper to mention, just because cameras were optional maybe 2 years ago. They're not optional today. In the markets that I write and that we look at, they expect you to have cameras. So that's just a thing now. And they want to know more. They want to know what truck are you using? Are you having smart cruise, active lane?
They look at speed records ever? Like, I'm monitoring my speed on a daily now through my camera or elsewhere. Are they going to sort of ask for any of that data?
There are underwriters want access to that. It depends, that they say this is where some underwriter friends maybe disagree a little bit, but they want their loss control, loss prevention department to help you. And I believe that. I believe they're trying to provide resource to help you. And, in a small motor carrier, say 100 trucks or less, everybody's wearing multiple hats. So using that outsourced resource to help you manage and monitor that information is not a bad idea. Of course, my antenna goes up, allowing the underwriter access to all your information. But I believe they're there to help. But they won't see speed. A lot of them would love to see your ELD information and your camera information.
All right. So, Johnny, you said earlier that sometimes you sit down with somebody and they're the president and the safety director. They're passionate about their business. They work in their business and on their business. And that's maybe a good thing. Bert, earlier today, you sent an email that I thought was very interesting. And you said, membership in associations isn't always a good thing, which, first of all, I'll point out that ATRI's data says that if I'm a member of an association, I'm more likely to be safe. Or maybe they say I'm safer. It's all linguistics, I think, at this point. But can you just explain yourself a little bit? Like, if I'm a member of an association, I'm sort of actively learning about my business. I'm trying new things. I'm staying up on what's fresh. But now you're indicating that it could potentially be a problem. What were you trying to say there?
So I would say 99.99%. It's exactly what you said, Sean. It's you're benchmarking. You're around peers that are helping you. You know, there's nothing sacred in safety, right? We're all helping each other. I have seen where certain level executives become presidents of these large associations, and underwriters frown upon that because that person may or may not be in the business enough. And so underwriters want to see that leadership, ownership is actively engaged in that motor carrier. And, don't know I can blame them, because if it's your business, you're going to take care of it. Or you need to have very strong leadership. So it's not that they shouldn't. I think they all should be. And I think the data that ATRI has provided is spot on. I hadn't read that yet, but I would agree that being active in any of your associations is the way to do it. We encourage that, as you know. We make commercials for all of those associations often, but I think if they're concerned you're not in your business, working on your business, that can be a concern.
So question, and we've probably talked about this a little bit already, but I think, a little bit anyway. So when carriers are shopping for insurance providers, what should they be looking for, right? Because it's an interview on both sides of the, right? What should they be looking for, right? I mean, can you offer some thoughts there?
Yeah, I mean, in a cost-driven business, we operate on pennies. Operating ratios here are not 50 cents; they're a nickel. We all know it's a tough industry, so cost always has to be part of it. But I'm looking at, God, this sounds so cliche, but that partnership. I mean, you want somebody that's going to be with you. One, provide services that you need and can use. Don't be afraid of the insurance market's services. They have resources. Use them. You don't want somebody to come in and just write a bunch of recommendations to leave and show up at the end of the year, but you want someone that can help you get things done. But two, look at their rating. They all have ratings. You don't want to see you don't want to write with a C paper. You may never get a claim paid, right? You want to look at those in the A's. So their financial stability, just like you said, it's a two-way conversation. Interview their claims people or talk to them about their claims people. I'll tell you that one of the number one things we see in both sides being successful is a face-to-face meeting. Try to get that face-to-face meeting. If you're looking at moving markets, like you're moving up the chain, going to financing risk from buying insurance, get a face-to-face meeting with your underwriter. That really matters. There's a lot that can happen by having them own your company's property and them looking around and seeing what you do. And if they can't do that for whatever reason, get to their office and meet with them in person. I've seen a lot of stuff done that way.
You agree with that, Johnny? Sound about right?
Yeah, absolutely. It is a little tougher with, when you talk about, and we'll revert to, the bulk of the industry out there's DOT numbers is the small to medium sized fleets. I think the thing for them is to look for an experienced agent. Obviously, there's a lot of people out there in the small fleet sector, a lot of different agents that could submit to some of these carriers that will, write just about anything, and they might write them, and cancel them after 1 year. And that can be frustrating to them as they learn and grow more about their business and learn more about insurance. Start at the foundation, start with an agent that understands trucking isn't just writing a couple accounts a year. Look for someone that maybe they don't have resources, but they're willing to help you find those resources. And the same thing with, and understand and learn how the insurance works, that it's not just the old days of, going to this one place and it's where you get. Some of these folks might have, an insurance, that's the agent and the carrier in one. That's not the case with transportation insurance. There's a lot of folks out there that have a retail agent and they have a program manager or an MGA. They don't know who that is. Typically, those people are the ones that can provide resources. They either do or they don't. If they do have them, tap into those, learn more about who your paper is, how long have they been around. There's a big difference in policies too. That's, an item for a whole nother discussion, that not all policies are equal, in the fine print. So if the agent truly understands and they're trying to put a lot of their business with this market because they like them, they have a good relationship with the underwriters and they know that they're listening to them, they know that they're trying to be proactive and get their accounts to the top of the pile, then you've got a good partnership there, like what Bert said, and that's what it's about. But there's a lot of folks out there that just don't understand that. They either choose to turn a blind eye to it or they are asking questions. And that's all they need to do is just ask questions, and they'll know right away, hey, am I in a good partnership, or should I move on to someone else?
You don't want somebody who's going to sell you the latest product. And I'm not taking shots at captives, but there's people just try to get you in a captive, and that becomes the latest craze. I've heard that I just need that captive. Well, the captive's not always the best thing for your program or for your company. It's called captive for a reason. It's hard to get out of. You're captive to it. And I know that may not be the popular answer, but it may be your answer, but it's not always the answer. So it's hard. It's really hard to get out of, and the fees in a captive can be way more than you pay with a typical insurance program.
Yeah. Well, I know, Sean, we're running up on time, but I did want to have one more question. I think, Johnny, you cover all different types of markets, and we've talked a couple times about small and medium-sized carriers who oftentimes don't have a lot of exposure or performance data, right, to evaluate, when you're looking to write them. Do you have any recommendations for those smaller fleets that they can do to look more favorably when they're shopping for insurance?
Absolutely. Yeah. So, a lot of the small fleets that we see have, throughout the years, and this is common, we've seen it for years. All of us have been in the industry forever. They've collected documentation from another trucking company, maybe an insurance company that they were with, and their files are kind of hodgepodge together, and they've got photocopies of photocopies. I would look, just look at your safety program. You hear safety program, but what is your safety program really? Is it just that someone is doing driver files and completing an accident register? Or do you have some basic policies? Because the issue is some people have taken stuff from other carriers and just said, hey, this is ours. But it's not really. They're not adhering to it. The minimum age and hiring guidelines are, look, if you're not adhering to those standards, that's going to bite you in the tail, right? Because some of this stuff falls out of the DOT regs and more into where you guys are playing, right? We want to see that, just make it accurate. Whatever your hiring guidelines are, make them that. Don't make exceptions to them. What is your process for a driver with some issues? Are you using telematics or are you not? Most of the small fleets are not. They might be subscribed to them, but they're not using them. Do they have a written progressive disciplinary policy that is not from the 1980s or 90s that says, no more than this many accidents, no more than this moving violations? Do you have a written progressive disciplinary policy addressing the telematics? Just make sure that, and it doesn't take that long, right? Most of these folks have them on a Word document. Make sure it's yours. Just make it look clean, make it look simple. Say, what you're doing, and then provide that as a copy. I don't know how many times you don't see that often in a small to medium sized fleet sector where an agent and a trucking client is putting together a file like what Bert's doing. And it doesn't have to be that comprehensive, right? They might only be running 10 or 25 trucks, but it doesn't take that much. If you take a lot of pride in your company and you have those things and you say, yeah, Johnny, I got those things, get them to them. Show it to them, because that's all it takes to separate yourself from the pack, and it's not that much. And if there's anything else that you're working on, growth plans and those things, but safety and compliance is the key to the insurance, and that's what the underwriters want to see, because they're already looking at your scores. Like Bert and I said, they know almost everything about you. So does the general public. Carrier's got the application for insurance. It starts with that. Make sure that
Steve, Johnny just said something. Say what you're doing and do. And I don't think you finished, but you got to do what you say. That's one of the biggest gaps. People have all these policies and they don't do it. If you're going to say it, if you're going to write it, you got to do it. You just have to. I mean, nuclear verdicts, I think us three discussed on a pod one day about, it's not the accident that causes a nuclear verdict. It's the company's policies and processes that cause a nuclear verdict. Mm-hmm. I mean, you've got to do what you say you're going to do. That has to happen. And the Johnnies of the world are going to find that out. And so, that's what we do. We help our clients discover those things. But you get a Johnnies of the world out there for the underwriter, that's not a good report. So just say what you're going to do. Say what you're going to do and do what you're going to say.
That's it. That's age-old advice. Well, Johnny, I think you said it right. We have enough for 3 or 4 more conversations. but we are out of time, unfortunately. I am still curious to know why some of those fleets that I audit that don't even have driver qualification files, how they're getting insurance. But maybe that's another conversation for another day, because they are, in fact, insured. But anyway, I wanted to extend my warmest gratitude to you, Johnny. Kind of a mid-temperature gratitude to Bert. It's great that he's here, and the comic relief is excellent. But
if everyone knew how hard it was to get this one done, I finally made it.
Great. Well, Happy New Year, everyone! 2026.
Happy New Year!
Appreciate you guys being here. Hope you have a great day.
Thanks for listening to this episode of True North Truck Thought. If you enjoyed the topic today and want to tune in for future conversations here on the TTT Pod, make sure to follow us. Also, please don't hesitate to let us know which topics you want us to cover in future episodes. Drop us a line in the comments section or send us an email to transportationnews@TrueNorthCompanies.com. Thanks and have a safe day.